This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios this Wednesday morning. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, good morning. It's only been, this is the third day, right? It almost feels like it's a Friday or something. It's like a long week.
So. It's a long week, right? A very long week. And of course, you have a lot of big cues. There's the US FOMC decision later tonight. The market has been so volatile and so many earnings. So I think we have our hands full today.
Well, that's right in terms of market action. But also, I just want to, send my good wishes to all the ladies out there who are fasting for their husbands, because today is Karwa Chauth. So those who are fasting and those who are not fasting as well, just continue loving your husbands.
Good advice. Nigel, keep expectations low. Huh? Don't.
I realized that my wife got up very early. I was like, what's happening? Okay.
What?
I mean, love should continue irrespective of the fast.
That's what I said. Fast or no fast, just love the husband.
On another note, what did you guys do with the market? I mean, I left at 3 and I looked at them. 80 points gone suddenly. Just wham bam.
It wasn't us, it was expiry.
All right, well, let's just see if the three of us can do something on the upside today. Expiry took a bite out of the market. Let's actually tell you what you need to know as we begin another session. So the Nifty two-day bounce was cut short. Basically, you had a bounce on Friday and Monday, 300 points, as we were saying yesterday. And it looked like a listless session for the most part till about 3 p.m. or so. And post 3 p.m., there was a sell-off. The Nifty ending about, 1/3% lower. And in that sense, then today becomes a bit of an important day. Is the bounce over or not? That question, perhaps we get a definitive answer. Hopefully, we get a definitive answer today, because if the bounce is over, then some of the lows that we saw on Thursday last week come back into play eventually, and maybe even lower. So we'll see. The U.S. market action is, I wouldn't say encouraging, but it is in the right direction, positive, right? I mean, the S&P was up about 0.65%. Actually, U.S. indices, both the S&P and the Nasdaq, technically speaking, have been looking pretty weak. The fact that over the last 2-3 days, they're trying to come back up gives one hope. Otherwise, I mean, chartically, you'd say that perhaps there is more downside here, but overnight we were okay. The 10-year yield went up about 4 basis points. We're at about 4.92. You have the dollar index, which also went up about 0.5% or so. It's back at almost 107 kind of levels. And the culprit here, of course, is U.S. data, which just refuses to weaken. The U.S. third quarter employment cost index came out. You also had the house price index, which was released. And, absolute, good strength, basically. And they beat at least expectations in terms of what the consensus was. Will this change when the Fed meets tonight? The answer is no. At least that's the broad, widespread expectation that the Fed will not do anything in terms of, rate hike or anything tonight. The Fed decision is later tonight. But you also will hear from the Fed Chair Powell. There he's seen keeping further hikes on the table. When I say further hikes, I mean beyond November. If you can move the graphics along, he's seen keeping the action alive for December and beyond. Not in November, not tonight, but beyond today. Oil prices, well, they've now fallen to around $85.5 a barrel. That's the big sort of positive rub-off that we've seen here. We were knocking almost at the highs at about 93, 94, and we are now closer to 85 kind of levels, which I think is a huge relief for importers, big oil importers like us. Now, let's just kind of circle back to the levels. The Nifty recent low is 18,838. And the question is that, are we heading back there with the sharp cut that we saw? I think the answer to that is a little complicated, because yesterday, as Nigel also pointed out, it was expiry. So maybe it was, more to do with that than anything really sort of, it's not as if the market has been very strong. The uptrend has been broken. And maybe this is a pullback within a broader uptrend. But for now, that uptrend has been broken. So I think we will need to wait for that answer. And I think today and maybe tomorrow we will get that, because I'm just saying tomorrow as well, because you've got the Fed decision as well. So perhaps that keeps people a little away today. The resistance is at about 19,280, same level we've put out, 38% retracement. And actually on the Bank Nifty as well, it sold off yesterday. It was quite remarkable. It hit slightly above the 50% retracement, the level that we put out, which is 43,348, and then sold off. So that becomes important. That's the resistance. The recent low on the Bank Nifty, of course, is I think 42,105. The mid-cap index, it got to about the 38% retracement and then sold off. So that is the resistance. There's been one test of that already yesterday. That's at about 39,136. And the small-cap index, it intraday crossed the 61.8% retracement. That sold off the most. It's rebounded the most. The resistance, that 61.8 number, is 12,728. So all possibilities are still very much alive. Because later tonight you've got the Fed decision and the commentary, etc., will be important. We'll see which way we want to really go. But I think it'll be perhaps a little cautious kind of a day, despite the fact that the cues, the handoff from overnight is not bad at all. There is some stuff happening in Japan as well, which we'll get to later. Big, massive depreciation in the Japanese currency. And that is largely to do with U.S. strength, rate differentials, strength in the U.S. dollar, and so on and so forth. More on that later. The GIFT Nifty is indicating 30-odd point lower start. Sonia.
Absolutely. So it's it's going to be a slightly muted start today, down almost about 30-odd points. The Nifty has been finding a bit of resistance at that 19,200, 19,300 level. And yesterday as well, it was a volatile day. By the end of trade, the Nifty closed below that 19,100 mark. A couple of things to watch. FI sold in trade yesterday. They sold about 700-odd crores, although DIIs bought about 340 crores. The US FOMC decision later tonight, so all eyes will be on that. The Dow was a tad bit in the green yesterday, but I think geopolitical concerns once again have taken center stage as there's no ceasefire just yet. In fact, Israel's ground invasion in Gaza has started. There was, a big invasion in the Jabali refugee camp overnight. So all of that has sort of, got the risk aversion or the cautiousness has heightened overnight in the global markets. In fact, if you look at it, equities have moved to the back burner while asset classes like gold have come back. So gold is almost at $2,000 an ounce now. Keep an eye out on that level. 1980 is where we're at. Getting back to our own markets, lots of numbers in focus. L&T, very good set of numbers. Strong order book growth is what we've seen. Revenue growth of almost 20%. The street will definitely like those numbers. Good numbers from Tata Consumer as well. The India revenues went up about 11.5%. So stable set over there, both L&T and Tata Consumers. On the weaker side, you had Navin Fluorine that reported a weak set of numbers. The margins were down about 160 basis points year on year, so I'm going to watch for that. There are auto sales that come up today and don't have great expectations from auto numbers because there was the Shraddh period as well. So we'll track those for you very closely. And 4 Nifty companies come out with their numbers today, including names like Tata Steel, Sun Pharma, Hero MotoCorp. So lots of data points today. But looks like it's going to be a slightly choppy start. And this level of 19,250, 300 has been a bit of a resistance.
Well, that's right. Sonia, and in October, at the start of October, you were saying October is a favorable month for the bulls. Yeah. But the bears decided to surprise them because it was the second negative month that we had for the Nifty in the last 10 years. And for the Nifty Bank, it's just the first time in the last 10 years that we had a negative month. Now, November, what does November normally hold? On an average for the last 10 years, well, returns have been close to around 5%. But that's skewed because in 2020, you had an 11% gain on the Nifty itself. Otherwise, it's been 5 to the bulls, 5 to the bears, so split down the middle. Let's see whether or not this is the decider, and let's see which way it's going to swing. Now, yesterday we did come off the top, and that's because of expiry-related issues. And this chart actually will give you the picture. The Nifty Financial Services Index at around 245 to around 3 p.m., as well as the Nifty Bank at around 245 to 3 p.m. Expiry-related move is what we saw because the Nifty Financial Services Index played out weekly expiry. Today, we have the Nifty Bank as well that will play out weekly expiry, so we'll have to keep an eye out on that. The broad band for the markets, though, is 18,800 on the downside to 19,250 on the upside. So that's the 450-point band that we're looking at. What are we looking forward to? If you get a dovish commentary coming in from the Fed, then maybe the Nifty makes another dash towards that resistance zone of around 19,250 to around 19,300. So let's see how that goes. The Nifty Bank, though, yesterday it went past the 200 EMA. It couldn't hold, though, above that level, and that's why we did come off the top. An additional positive this morning is that Brent crude prices are hovering around that $85 per barrel mark, which is good. A few sessions ago, we were more than $90 odd. We want lower crude prices, which is very, very positive in terms of input cost as well. So that's a tick mark, and that's something that the bulls may latch on to. What did the FIs do? They added longs as well as short positioning. Doesn't move too much. 87% of their positions on the short side. One strike that was very active yesterday is the 19,200 call. It added 45 lakh shares. The premium out there is around 36 rupees. At the start of trade, it was close to around 98 rupees because we started gap up. So there was some writing that we've seen at that particular strike. That contract expires tomorrow. So going by the writing that we've seen out there, the resistance zone comes in that vicinity of around 19,233. That's the high that we saw yesterday. And from there, we did see a bit of a downtake. Support, though, because we have, the 19,000 put as well, that has a fair bit of open interest. That's why that's the support zone. The premium out there is around 50 rupees. So that perfectly bakes in at around 18,950. For me, the big cue today is how the Nifty Bank performs. Yesterday, it has an overlap with the Nifty Financial Services Index. So that's why it did come off. The 200 EMA, can we retest that? Yesterday, we went past that intraday, but we couldn't hold on there. So that's the important mark on the upside. That's the resistance zone you're looking at. On the downside, support comes in at around 42,450, which is more or less close to the recent lows that we saw out there. So let's see how this goes. The GIFT Nifty, flattish start. The Nifty Bank is the one that will give direction today.
And later this evening, we'll have the US FOMC policy as well. There's an expectation that there'll be a pause in terms of rate hikes, but commentary will also be important as the US 10-year yield has been sitting at 5%. But here's what you can hear in the next 2.5 hours. We actually have some commentary coming in from Rhythm Desai of Morgan Stanley, who says that early trends suggest an earnings beat on their analyst estimates, albeit the market appears to remain cautious as evidenced by share price performance. Post-announcement, he says they continue to estimate earnings ahead of the street and think that the street will need to revise FY24 estimates higher.
Well, let's get you some money market views as well. This is Kunal Sodani of Shinhan Bank, who says that there are no surprises expected from the Fed and it may hold the same tone and message as the previous one. He says expectations that the ECB is done raising rates undermine the euro and act as a headwind. He says the dollar index may find resistance at 107.2. For the dollar rupee pair, he says 83.18 acts as a support, while 83.3 to the dollar is an immediate resistance, a break of which can lead towards 83.5 levels.
Okay, and on the bonds today, you have Neeraj Gambhir of Axis Bank, who says that bond yields were in a narrow range as the market awaited clarity on open market operations sales. He says the US yields came off due to short covering, and that, along with crude oil coming off, led to improved market sentiment and a mild rally in domestic bonds. He expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.4% this week as the market awaits the FOMC decision and key data.